So Paramount is now going hostile. It wants to buy Warner Brothers for $30 US per share in cash. Meanwhile, Netflix, it wants the whole of Warner. Netflix only wants the Hollywood studios and streaming business. So it's a three-way fight right now. We got David Dietze joining us, Chief Investment Strategist at Dietze Wealth Management Group. David, what jumps out for you here? There are Warner Brothers in play, to put it mildly.
What I love about this deal, Andy, is it affects almost all constituencies around the planet, really. You've got the politicians involved with President Trump saying he doesn't like the deal, doesn't think it's going to pass antitrust muster. You've got Hollywood up in arms. They're going to lose another a key source of their business with HBO Max going into the hands of an inveterate streamer, Netflix. You've got Wall Street licking their chops. How high will the ultimate price be paid for Warner Brothers? This was a stock that was around $12 a share as recently as September. Now it's knocking on the door of $30 a share. That's a great payday for the Warner Brothers investors. We don't know how it's all going to work out. It's an intersection of law with antitrust. And also, it's going to involve, in addition to the regulators, the Ellison family. David Ellison's in charge of Paramount. Their bid has been ignored for $30 cash. Mm-hmm. To what extent do the Ellisons dig deep and up their offer to try and make Warner Brothers their own?
And why do they want Warner Brothers so much, David?
Well, it makes all the sense in the world. They could add all the streaming business that Warner Brothers has and add it to theirs, give it tremendous scale. They would have one of the greatest content libraries would then be in their pocket. And then they could also take their linear assets, including the CNN newsroom, and combine it with CBS. So it gives them tremendous scale to make a run at being a much more meaningful media player.
And I mean, it seems like a given Netflix will have real trouble buying Warner Brothers. My wife has worked in the entertainment business for years, and she was just shaking her head on Friday saying, this is just impossible. It would give them far too much power.
Yeah, I think it's a toss-up. Netflix thinks they can do it, and they're willing, and they have said and legally committed to pay $5.8 billion to Warner Brothers if this deal doesn't go through due to regulatory reasons. So they're putting their money on the line there. I think a key issue is, what's your marketplace here, Andy? Is it the streaming business, or is it a much larger entertainment business, which would include, for example, YouTube, mm-hmm. TikTok, Instagram? Certainly, it's going to be great fodder for lawyers. It's going to take a very long time. It's going to be interesting to see how that works out.
Yeah, I mean, that's interesting. I think that's the argument Netflix is making. We're competing with YouTube, aka Alphabet, and YouTube is becoming, if not the biggest thing in television, a mighty player.
Personally, I don't really buy it, Andy. I mean, I don't think, families, after dinner say, well, what are we going to do? Are we going to look at a streaming film from Netflix, or should we just turn on TikTok? So I do think it's two separate markets. I'm not seeing too much price erosion in terms of meta platforms or Alphabet, the parent of Google and also YouTube. So I don't think that their shareholders necessarily see a bulked up Netflix as really that problematic for their businesses. So I think, I think that Netflix saying this part of a larger business is a bit of a stretch, but anything can happen here.
Yeah, I mean, it always does seem odd that YouTube would be called Netflix's biggest rival, but I guess they have the resources to bring in more and more custom programming. I think they are making some custom programming now.
Yeah, it's possible, but I don't see anyone in Hollywood saying, well, that's all right if we lose HBO Max into the hands of Netflix, the inveterate streamer, because we can just go to work for YouTube. So I think it's a bit of bit of a stretch there. On the other hand, 5.8 billion, Netflix putting their money on the line. On the other hand, Warner Brothers said, you got to pay us 5.8 billion because it is a big risk, and we need some meaningful money to take that risk. What I think is going to be interesting is, does the Ellison family, David Ellison, who really controls Paramount, they're going to have to come in with at least $33 a share, I think, maybe 34, 35. I think another interesting aspect of this is I don't think David Zaslav, who controls Warner Brothers, wants to go to work or sell the company and have CNN go over to the Ellisons. There's a little bit of political bad blood there, too, which also makes this story so interesting.
Yeah, the fate of CNN. Obviously, CNN revolutionized TV news decades ago. I suppose to some extent, there's so much competition, it's lost a lot of its relevance.
Yeah, absolutely. And of course, you've got the Ellison family is somewhat aligned with, the White House, President Trump and so forth. And so you can imagine there's a lot of consternation as to whether CNN would ultimately be controlled by people who are aligned with the president. So that's another theme rippling through here. And of course, from Netflix perspective, you've got people on both sides of the aisle railing against this deal. Senator Warren, Elizabeth Warren, came out and said this was a horror show of a merger. And of course, Donald Trump made his feelings quite clear based on law, of course, the other night. So it's just going to be so interesting, but nothing is going to happen quickly. But I think the ball is now in the court of Paramount to up their offer. If they get up to 33, 34, and 35, I think then Warner Brothers would pay the $2.8 billion breakup fee that they would have to pay to Netflix. That's about $1 a share, and take that higher offer, which probably, to the extent it's all cash, can proceed much more quickly, less regulatory scrutiny.
Finally, David, just on the broad market, do you think there's a risk that people will think after a hectic year for these AI stocks, some of which are off their highs? Oracle, of course, has come down from its peak. Do you think there's a risk that people will start lightening up and selling some of them in the bulk for the balance of the month?
Yeah, I do. I mean, and we've just heard, for example, Ed Yardeni say that, people should no longer overweight the Mag 7. And of course, we saw in November a lot of money coming out of those stocks. Having said that, Andy, we're just a little bit off of an all-time high in the S&P 500. What I like in terms of the bullish case here is the money is gravitating to other areas of the market. Healthcare stocks is one of my faves here. Financials are doing well. I think all in all, the market can still continue to be a great vehicle for long-term investors, because I think that money may not be the best place, may not be the Mag 7, but I think there's a lot of other areas of the market that look very attractive, particularly as we get potentially a rate cut later on this week, and perhaps a very favorable Federal Reserve later on when the leadership changes.
Thank you very much, David. It's always great talking to you.
Thank you.
David Dietze, Chief Investment Strategist at Dietze Wealth Management Group.